All right, welcome in, everybody. Hope you're having a wonderful day. It is Thursday, April 7th, 2022, and the markets continue to fall. Almost down 0.5% today, which is kind of expected. Why is it expected, Bob? Well, let's go to our linear regression. Nothing frames it better than linear regression. Look, we went to the bottom. Remember, Bobby said right here, I said, y'all, we are in a bear market. And everybody laughed because the market went up and 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 up. But it went to where we thought it would go, to the top of the linear regression. And then what is it doing? Down, 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 down. Now, it can still go back up. It still could, but I believe we are in this downward spiral. You never see that. It's kind of cool, though, isn't it? And now we're below that 200-day moving average, which the bears are looking at going, oh, yeah, this is it. So who knows? Well, we have no idea. We just got to play every day. All right, so let's go and see what our daily thing is doing. Our AD is weaker than yesterday, negative 200. We are at the overnight low there in the purple of the Globex session. This is some pivot point. We have no idea what that is. It's just a pivot. This is the cash open. This is the hourly mid band. Kind of shows you what's happening hour by hour, kind of the hourly mid band going down. The VWAP is going down. This is another pivot. This shaded area is the opening 15-minute range. And right now, the AD is chilling, baby. We are chilling. Just kind of flat. So volume, again, anemic. Look at this, 3,922 contracts being traded. Not a lot at all. So a lot of that could be us, maybe. All right, so what does our little big green monsters tell us? Well, let's check it out. So this tells us that we are oversold. Right? Oversold. You would anticipate maybe a pop back up into this area because we're oversold. Who knows? But we're oversold at the moment. Then you'll notice some of our stuff kind of contradicts each other, right? This is oversold, which says we should pop up, whereas our linear regression channel says, it's business as usual, but it could pop back up here, right? So kind of interesting just to see what the market's doing. Thing is, we really don't care. Right? We just really don't care. Let's just trade what we see in front of us. All right. So let's look at our Greekies for the day. Let's go to the IRA account. IRA is this one, I think. All right. So let's see what things are doing here. We're down $200 today. Hey, wasn't it smart of me, though, to buy that SPX put? So it's up 75 today. So it's kind of doing okay for me. All right, so our Greeks, we're a little bit positive, right? We've got positive theta, but not a lot. And we've got negative theta, which is what happens when you sell options. Okay, so what do we do on a down day? Well, we do what we always do, is well, first of all, let's record our net lick and all that. Let's do that. Should be down a little bit. Let's see. Spreadsheet. So my screwdriver's not working again. I hate it. It makes me have to restart my computer. I don't like restarting my computer. And yesterday I cleared all my cookies out because my online bank won't let me do the bill pay. For some reason it says can't go to it, and it will on my phone. So it's a cookie problem, I think. And that's why it took me so long to get into our stuff today. All right, so what are we doing? Not this account. Let's go to the other one. Yeah, here's our accounts. Let's go to our NetLink, see how we're doing today. Not doing good. I'm telling you that. We're going down, baby. How you doing, old Bob? See if I can see what our balance is today in this account. Come on, baby. Recognize me. All right, here we go. We are at 100, 820. Hey, we're up some. 100, 828, 38. So we're up 48 bucks on the day. Even though it says we're down 200, because it depends on when we record it, right? So now let's look at our Gregson ratios. See if we're in line. We don't want to be too long. We don't want to be too short. So what's our SPY? 46.61. Oh, and if y'all have multiple accounts like I do, make sure you call Thinkorswim or Tasty, whatever, and you make sure that your best commission schedule is applied to all of your accounts. Remember, my spreadsheet didn't work right because I was paying $3 more per trade in my IRA. And I was like, that's not right. And it was because the commissions were different. So I called them yesterday and they swore to me that they're going to make that right. So we'll see if it does it today. 1342 data. Because we fight for these commissions, y'all. I fight. I call every 6 months. Have you never called? If you're putting these micros on every day, you need to call them and say, hey, dude, I need a better rate on my micros. It's just something we need. 199.87. 199.87. Work your broker, baby. Work your broker. All right. How much buying power we're using, Bob? 29,000 and something. Yeah, you want the best commission you can get. 29,466. 29,466. So we're using 29% of our buying power. What's the VIX today? Come over here, Mr. VIX. Come over here, dude. Mr. VIX. You or me one, Mr. VIX. VIX is 23.24. So with a VIX of 23.24, if you're going to be safe, right, it says buying power no more than 35%. So we're fine there. So we need to bump our theta up, and we could increase our buying power if we wanted to. And it says we need no adjustment. I like that. We're delta neutral for all intents and purposes, whatever that means. And some people says intensive purposes, which is good. All right, so everything looks good. All right, so what are we going to do? That's a good question. Let's look at our individual trades, see if anything looks like we need to manage something. Show our groups. Okay, that was down 26%. Our BSH loans. I wonder if I could, what can I sell those other shorts for? Let's look at SPX. Because you know we've got a Sweet Bobby hedge in. And I was waiting for those to, let's see, look, the cool thing is we may be losing money galore on it, but we got a lot of days left on these that are providing us some protection. Right? So we sold those for, or bought those for 680. What could I sell the shorts for now? 530. Unbelievable. Unbelievable. So is it worth selling them at 530? Probably not. All right. I'll just leave my alone. So all right, so that's it. 111 first is up 60%. So here's why we like them. They're resilient. Look at that. Down 375. That's net. ES 112. Oh, here's the one where we closed half of it yesterday, right? We're down 62 today, but we're still at 412 on that one. We closed the tranche yesterday. 112 second, still up 41%. And the reason we're not going to close anything, that was down just a bit. 112 third, it's up a bit. Liking the way my BSH diagonals working. 112 second, down a bit. 111 first, down a bit. ES 111, down a bit. Wow, that's down big today. 111 third, down 10. 111 fifth, down 50%. We're not used to seeing these things down, are we? 11, that was down a little bit. 2750, 111 fourth, down a bit. That was down a bit. Okay, so what are we going to do? That's a good question. Well, we're going to do what we always do. So let's go here. Let's go to the macros. Let's put one on. Put one on. Put one on. Put one on. All right. So we'll go to trade. Go to the table. Where do we go, people? Y'all know where we go. 54 days. Yeah, what do? We do a long put vertical. Spreads these out. 50 wide. And then they get hung, and I grab, grumble, grumble, grab. And that one gets hung. Ports wide. Keep on going with it. Keep on going, darling. Together. And we'll go down to where we're going to buy them for $10. And you can do this in the e-meetings. You can do it in a lot of things. You can do this in Apple. You can do this in anything. That especially if you are looking to maybe buy shares at a discount, use a 111 like you would a naked put. That's 50. That's 1075. We're going down, baby. Going down to 1050. There's 10. We'll go one more. There's 975. Pop it up to 10. See if we get filled. See if the liquidity is there for us to get filled. And jack squat crap dang nothing. Why? Because the liquidity is bad. Just is. When we've got the liquidity, we're always getting filled at 10. Leave it up 10 and 40. Unbelievable. All right, so we're filled there. So now let's go sell something. So let's go sell something for about $20 to pay for that. About $21. We'll sell that one right there. That will fill. What's this? How do I know? I got a feeling. I got a tingly feeling. So y'all know I've been working out at the gym. And y'all know I got my toe amputated back in 2020. So I've been working out at the gym, doing an hour cardio day. I looked yesterday, I've got a blister on my toe, on the same toe that I had amputated on the other foot. So I've got an emergency appointment with my podiatrist today. Unbelievable. If I have to lose another toe, y'all, I'm gonna be so upset, especially when I've been dieting and exercising. And I'm hoping it's not much. Right, so let's go put this trade in over here. Okay. So here we go. I mean, it's like you can't win for losing. I'm even eating vegetable muffins. Then you have to be in the hospital. I'm supposed to graduate from college. Well, I've already graduated, but I got my graduation ceremony in just a couple of weeks, like April the 30th or something. Jeez. So we sold at 38.10. And you think, taking a toe off, that's nothing, right? You think it is too, man. Because I had to get the fire department to get me in the house last time because I was trying to get up with my little crutches and everything. I just couldn't do it. All right, so we're going to sell that one for 21. Then we're going to do the 42.60, 42.10. And here we can do it as one order. 42.60, 42.10. 260. We'll buy that one. Sell 42. Yeah, toes are important. Stuff that you want to keep. I had heard that for futures options, Interactive Brokers had the most reasonable rates in the past, and probably does, Jim. Probably does. It's just that I don't like their platform. To me, it's rinky-dinky looking. I'm gonna stay here with my boys. My boys have brought me here. My boys have taken care of me. And I'm just gonna stay with them. So this is gonna be the 111. Looks like the 7th. Right? So we'll put that in as the 7th. And let's see if they corrected my commission structure. We had 1117. And y'all don't have to do all this grouping stuff, but it keeps me sane, keeps me macros. It is. Now I shared the spreadsheet in our Discord. Right? So y'all got this. We're doing one tranche. This is the 117. And we did the 42.60, 42.10, 38.10. So on the flip side, this is a 111 at 54 days. Takes a little while to log your trade. You don't have to. We went a long time without doing it, but I thought it'd be better if we started it. 4722. And we got filled at 1150. That's kind of good, right? Field order 1150. Let's see if I corrected my commission structure. 1150. So that should be a credit of $53.09. Have my boys fixed me yet? $53.09 going once, going twice. Come on, darling. 53.09 and ta-da! My boys took care of it, and girls. They got me the same commission structure as in my other accounts. Because you work for that. You work for your commission structure. Get it in all your accounts. I mean, and they do it with my corporate accounts, I got all kind of accounts. So they transfer it to IRAs and everything. So make sure you get that. All right, so we got credit of 53.09. Right, so that's good. All right, so the other account is the fun account, because in the other account, we've got it not renewing my Norton. I've got McAfee or something. All right, so now we're going to do the other account. Now, the other account's fun because this is the one where we're putting one on and taking one off, right? So let's go look. This is the fun part. When you get so many of these on that you go, I'm going to take one off, I'm going to put one on. All right, so let's see what we got over here. This 112 call must have been closed yesterday, so I can delete that. See you later, alligator. Okay, so we got a 112 fourth is up 91%. You're the winner so far. 112 seventh, 59%. Nope. 112 12, and 34%. We ain't taking you off. 110 negative 81%. Nope. 112 10, down a bit. 112 8, up a bit. 111 down a bit. We'll go quickly through this. Aha! 92%. Screw you, 112 fourth. I'm going to take you off. I'm going to take 112 third off. All right, so we got negative 52, 112 ninth, 43, 88, 88%. 100%. Y'all laughed at me for doing this. Now, y'all, this is the funny one, right? Look at this. This is the one where I did. I come up with my own version of a 111 or 112. So I did a 112, what I call a bear, which means I did a debit put spread, and then I sold 2 calls. How about that to pay for my debit put? So this was a bearish 111, and now I'm up 103%. Remember when y'all were like, "Oh, Bobby, that's done. What are you doing? What are you doing, Professor? Oh, Professor Bob." 95%. Look at this, y'all. 28%, 31%, negative 17%. Oh yeah, we know we're closing you. All right, so let's close this. Let's see if it's in my spreadsheet. Do I have the 112 bear? I think I do. I think I do. 112 bear. Oh, hold on. Let's close this spreadsheet now. We don't need you anymore, so let's get this spreadsheet. Here we go. 112 bear. And here's my commission structures with fees, right? So I do 182 on ES, SPX is 123. This includes exchange fees and everything. 145 on the micros, or 147 on the micros, 85 cents on VIX, 55 cents on stock options. Okay, so what are we doing? Oh, let's see if I got my 112 back. There it is. Oh yeah, baby. We about to take you off for 100% profit. So let's take this off. Let's take our naked call off. Hit close an order. We'll buy it back at 21. That is insane, right? Oh, I know one. We gotta do 2 of those. That still doesn't seem right. Seems like my naked call. Oh, that's a put. Sorry. Here we go. There we go. What I sold for 20-something dollars, now I can get for maybe $225. Let's see if we can get closer to that 225. Be greedy, y'all. Work your orders well. So let's try to be greedy. 220. Come on, baby. Remember, we sold that for 20. Uh-huh. Uh-huh. Come on, we're fishing. Fishy, fishy, fishy. Come on, baby. There we go. There you go, sweet Bobby. Little old dude. Look at you. All right, so this is a put debit spread. Now, if you wanted to put your put debit spread and keep it on, blah, 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 I guess you could. But Take it off. Closing order for this. So we would have, let's see, we would have bought this for $10, right? So now we're going to sell it. We bought it for 10. We're going to sell it for $5.25. Well, that's terrible, right? Because you're losing money on it. But that's fine. You made the money in the other. So let's see what we do. Come on, get me out of it. Get me out, baby. Use our credit. We got a message. Got a long message. Had a question about modeling the risk on the 112. Is it possible to overcome the loss on the negative hedge? Anytime I put in enough 111s to fill a month, I have to add so many hedge positions I don't make money, at least in the analyze tab. Would you mind going through this so I can figure out what I'm missing? Yeah, that's a deep question, right? Because you want to make sure your hedges are good. Yeah, that's a great question. So let's look at that. All right, so here we go. So we did a credit. Y'all help me remember this. A credit of $5. Remember, I can't do math in my head. A credit of $5. So we got $5 coming in, and we had a debit of $2.35. So 5 minus 2.35 means that we had a credit of $2.65 here, right? Overall. Let's put that in. So here's the trade right here, line 6. So we had a credit of $2.65. All right, so if I'm gonna close it out, I'm gonna exit here on 4/7/22. And my debit. So it says debit. Well, I don't have a debit. So you got to make it a credit by putting a negative sign in it. So negative 265 was my credit, not a debit. Negative 2.65. Which means I had a profit of 76.77. Wait a minute. No, I did this wrong, didn't I? Because I'm putting in, I need to do a thing where I need to do the dollars. That's not the price. Sorry, I did it wrong. So I think what I should do is this. Make sure I do it right. Here we go. We received a credit of, our dollar credit was 2206. 2206 was our credit. 22.06 was our credit. Credits. Oh, y'all hate accounting classes like I did? Oh, some people were so excited. I go, what are y'all excited about? This is the most boring crap. 2644 is my debit. Unbelievable. So, is that right? Oh, something not something right. So I had a credit of that, and I had a debit of 26.4, which means I had a debit of 438. Okay. That seems right. Which means my debit was $4.38, which means I made $69.74. Now let's make sure that's right. So when I Bobby, get on the right line, dude. Yeah. Okay. So when I sold this thing, I brought in a credit to $74.12. We brought in $74.12. All right, that's money in. So when we went over here, we received another credit. There it is, credit. So we received a credit of 2206. Look at those. So we got plus 22.06. 96.18 is what we brought in. But then we had to pay money out. How much money we pay out? So our debit was 26.44 minus 26.44. 0.44, which means we made $69.74 on a trade that I was experimenting with. So let's go 26, 69.74. Ta-da! So awesome. Now, what I need to do is make it where I can do the debits and credits, and it'll automatically figure out the total debit or credit, but I'm not there yet. All right, so 69.74. We make this all green. All right, taking one off. Taking one off. Make it green. All right. So now what do we do? All right, so now we got to put another one on. All right, we took one off, so let's put one on. And we know the strikes already because we've already done the trade. Now, I should have copied that order. Let's see, let me go to the other account. Let's see if I copy the order. Field order. So, copy. There we go. Now we'll go to the other account, which is the Crimson account. How do we paste it in there? Trade, MES, 54 days. How do you paste the account now? We do it here. Ta-da! So we delete that. Trying to figure out what to paste. Paste order from clipboard. Ta-da! Oh, well, there's no order in the clipboard. That's what it was. That's what we're going to sell at 38.10. Just build it again. 54 days. Make sure I'm in the right account. 38.10. Oh, Bob. Get it together, old pal. Jim's got a question. That's 38.10. We got 42.60, 42.10. 42.60, 42.10. Buy that one. Hold your control key down. Sell 42.10. What did we get filled on that at? 11.50 while ago. So we can get 11.75. Greedy, fat, black glass wearing, 9-toed. Hey, look at there, y'all. Huh? Yeah. 11.75. Look at us. So we're going to call that the 11173rd. 173rd. Keep putting these things on. All right, so we've got what we put on 146 of these at least because we're doing them in 2 counts and we didn't have a loser yet. That's why we're, people are saying, why are you doing this? I mean, well, it's working. It's just a 111. Let me say 73rd. 11173rd. Put him in. It's in the macros. What contract? 11173rd. Because I like what's doing this. Like I can go back to 2016 and see my trades that I'm entered in. It's kind of cool. So, oh man, that one made that one. So we did the 42.60, 42.10, 38.10 puts 111, 54 days. 7. We won't check our prices every day, but until we get these things, make sure everything's working. 11.75, so we brought in 54.34. Let's just double check. 54.34. 54.34 should be the credit, and it is. All right. Let me go back to Jim's question one more time. I had a question about modeling the risk on the 112. Is it possible to overcome the loss on the naked put? So we're talking about our far out of the money put with a hedge. Okay, so anytime I put in enough 1-1s to fill a month, I have to add so many hedge positions. I don't make money, at least in the analyze tab, when you might go to figure out what I'm missing. All right, so let's look at first of all, I'm going to stress all the accounts. Let's look at all the accounts. Let's see how we're doing. All right, so all the accounts, and I normally, put this on ES. We'll go. Bobby. We'll go portfolio beta weighted, right? Make sure you're doing portfolio. I'm going to hide your simulation so you're only seeing your positions. And so portfolio beta weighted, make sure we got everything in there. Okay, so here's what we look like. So, vol step 4, let's pop that to 10, maybe 15. I'm not sure that I'm good and hedged to the downside. Let's see what we are. So we're looking at we got some concave, what do they say, concavity, convexity, and all that kind of stuff. Look good if we go down here. Let's see where my price slices are. Somebody's been messing with my price slices. I normally stress myself to the downside to about 20%. COVID crash, 35%. 1987 crash was what, 24, 25%. So I'm underwater $30,000 if we go down that far, and that's on all my accounts, right? So I don't even know that I'm adequately hedged. Now the thing is though, is I don't know that I have to be. So I've got those puts in there. I've got all kind of stuff, but I think, it's a good question, Jim. Maybe I need more hedges. I just don't think that I do at this time. I think I'm comfortable with what I'm doing, because what we're doing is we're putting things on the let's see what our MES trades are, just themselves. MES and single symbol. What does this look like? What if we go down 20% here, Bob? All my accounts. So this is about what, 132,000 or so. What does it say we're looking at? Come on, fill out, baby, fill out. $108,000 down. Unbelievable. If we go down 20%. Well, it's bad, doesn't it? That's why we have our SPX trading. Our XPX. Geez Louise, who messed with my price slices? And I try to set up the same price slices on all of my stuff, right? So I can see all my stuff. So I've got those 5 big puts out there that are going to give me 128,000 if we have a big down move. So yeah, you may not be able to totally hedge the downside, and so you may not be missing anything, Jim. Maybe that's just the risk that we are assuming. It's kind of like why I like doing this, Jim. If it's kind of like why I like doing this, I want to make sure that I'm not too far positive or too far negative. I want to make sure that I'm pretty neutral. Only two. Now, if you wanted to do something to give you a little bit of additional hedge, this is kind of the tasty trade thing. Do you remember when they would always say, look, if you kind of want to be hedged to the downside, make your Vega 1/2 of your theta? Isn't that what it is? I think that's what it is. So if I were going by the tasty trade hedging, then I would put on additional negative deltas to compensate for that increase in volatility that would go up. So you'd want it to 1-to-2 ratio of your Vega to deltas. But I'm more this, I'm more like, I just want to be kind of delta neutral. So I think I'm fine. And what I'm going to make sure that I do, and it's working now, is should I have put one on the put side? Well, generally the 111 and 112s we do on the put side on down days. So that's kind of what we do. Just keep your deltas kind of neutral or slant them to the positive to get a little more hedging there. But I don't think you're missing anything. Maybe we can't adequately, hedge that to the downside without it, you're not making money. Everybody good with that? So maybe we don't have a perfect hedge for the number of 111s that we're putting in. But again, I think what we'll always be able to do is be able to put in something. Now, is there a way to do it to where you could do your, if you wanted to define your risk, maybe you could do a put credit spread on the downside. Has anybody tried that? I think I saw some of y'all actually trying something like that on the downside. I don't know. I think I'm fine with the risks that I'm taking, and you got to be careful with the risks that you're taking. And remember, y'all, when span margin, when things hit the fan, it goes up. That's why we don't go over our buying power suggestions here, right? We're trying not to blow out your account. So, the highest that we ever want to go is 50% of your account, and that's if VIX is 40 or above, because you just don't. You just want to. Size is what kills. And maybe, it's to a point that you don't want to put on a 111 every day. You got to look at your account, what your account can handle. Maybe you're doing once a week, once every 2 weeks. I don't want everybody just to blindly follow me because I'm doing 1 in 3 accounts every day. Don't just blindly follow me. Yeah, there's always a possibility of stopping it out, right? So I think some of you are probably doing a 2x loss on that. I think, what was Tom doing? Maybe a 3x. Someone's doing a 3x loss or something on the short put. Yeah, we can do that. Now, the problem is you can't do a stop order, right? You can't do a GTC stop loss order on Thinkorswim, on futures. So what you need to do is, unfortunately, you got to either watch it or set up some type of alert. So I'm not sure why you can't do that. It would make sense to, okay, 1.5 times the max profit is where he fails. Yeah. So, you could look at that. What's your max profit? So 1.5 times max profit. And that includes the max. So the max profit is if when it closes within that little, what he calls a tent. Yeah. So make sure what you're doing. Make sure hey, what is my exit criteria? If you're running stops and things of that nature. Got to always know, how much pain you can take. That's for sure. All right, guys, good session today. Hope everybody's enjoying it. And yeah, why are we doing 111s? We said we ought to change the channel to 111 channel. They're just working. Maybe they won't, at some point. Maybe they'll all start losing, but it was kind of cool. We've been doing them for what, 6 months? 6 months or more, I guess. And we haven't had a loser yet. We almost had a loser. Hadn't had one yet. So we'll give them time to work. Now, we did the back test. If you're going to take them off as a full trade, put one on, a complete trade, take it off, we kind of found that 65% profit is that sweet spot. Right? If you get 65% profit out of one, it's probably a good idea to close it. Keep in mind, though, you want to look at, hey, well, am I using all my buying power that I should be using, and is my theta sufficient? That's why in the IRA, I'm not closing them yet. I don't have enough on, because my theta is still anemic, because I have those long puts in there that give me $128,000 profit in the event that we go down 20%. So, there's no perfect trade. There's no holy grail. There's no, and we do take risks when we do it, but it's a good risk. There's never a time that I wake up fearful. There's never a time that I wake up going, oh no. And I hope you're that way as well. Size is what kills. Size kills. How many of us have, have traded 80% of our buying power, selling options, and next thing you know, boom, market tanks, and they'll wipe you out. So make sure, if you're using our spreadsheet, which is in our Discord channel, follow something along these lines. Or create your own. This is stuff that I got from some market measure or something that Tasty Trade had. Right? And I asked Tom, I said, but Tom, what about if you're using span margin? Would you use the same? Yeah, he said. So, is that the right answer? I don't know, but I've been comfortable using this. And I think this is a pretty good, don't use half of your account. Now, if you've got a $2,000 account or $5,000 account, you probably, if you're going to make any money, you're probably going to have to use 50% of your buying power at all times till you build that up a little bit. When you build it up a little bit, go to, these more conservative guidelines. So, now, here I am violating my own rule, right? I'm at 56%. Well, this is a smaller account. So, I'm kind of feeling that I have to. But what I'm doing is when I take risk on, I'm taking risk off. So I'm trying not to increase my buying power on a daily basis. So good discussion today. Very good discussion. So I hope y'all are enjoying it. Hope everything's working well. Hope the trading's going well. Got any questions, call me. Hopefully I get to keep my other toe. And I'll see y'all tomorrow.